Hey there everyone, I'm Dr. Stock, Doctor of Education, and in this video we're taking a look at the markets to see how they've been behaving recently and what I think is going to finally move them from the sideways trading that they've been doing over the past several days. So with that said, I do want to show you this offer from Moomoo. You can find the link for it down in the description. You get up to 15 free stocks by signing up and making a deposit into the account, and for $100 more you get 5 free stocks, $1,000, 15 free stocks. If you want to look into it, please check out that link down in the description, and then don't forget about that link for the Patreon as well for access to my exclusive content, as well as access to my private Discord with me and my other community members. We'd absolutely love to have you over there. All right, with that said, I do want to get right into the charts. So right here, we're looking at the SPY, and we can see there's actually kind of some interesting stuff going on. It is important as we look at this to see where we're going to go with the RSI, which right now is still in bullish territory. When we look at this, it's between 50 and 70, so we're not overbought. We're still looking pretty good, although I think it takes a catalyst to move us up beyond where we're at right now. You can see the sort of resistance that we find ourselves at right now in a sort of an area of support, and we want to see, will we push on to that 4,200 level in the S&P? When we look at the SPY here, there'll be about the $420 to $425 range that we're looking at, so that'd be the next push up from the 414 that we find ourselves. That's about another 2.5% that we could rally on from there over somewhat of a reasonable time frame. I'd say throughout the end of April, we could possibly see that. We do want to pay attention that we could possibly drop back down to that 400 level, and we have that line between about 406. So that's about 2% down to, let me see, 14, 3.5% down from where we're at right now. So honestly, we're sort of in a limbo area where we could go in either direction when we look at the SPY. And now let's take a quick look at the Qs. There we go. Now the Qs, I'm a little bit more concerned when I look to see the RSI as it is, because we actually have some divergence going on here, some bearish divergence where we have the stock price going up, we have volume somewhat tapering down, and what we have in the RSI is also some falling momentum there. So it really matters where that third peak is. After we start to trail off, will we drop into bearish territory? Will we touch it, bounce back up? If so, do the prices keep rising while the momentum indicator keeps falling? That's something we want to pay attention to. It doesn't mean that we're absolutely going to see a pull down. Honestly, I said that there's some things that I think that it's going to depend on. I'll get to those in just a moment. Right now, I want to take a quick look. So we're currently at 318 as of yesterday's close, and we have room up to 331. So that's $13 up. That's over 4% that we could run up to this previous peak. Now, breaking above that is really going to cause some excitement in the markets. However, we do also have room to drop down to that 50-day, dropping us down to 305. So that would be $13 down. So about 4% down from where we're at. So there is support to be found in between, by the way. I don't want to make it sound like it would be a straight drop to there. We have room for, let me see, 5%. About 1.5 to 1 2/3%. We could also drop down to 309. So we'll see where exactly that lands us. And we have decent amount of support, and we have somewhat a little bit of resistance on the way back up. We can see the market sideways trading. Like we said, it's been very frustrating for those of you who keep your daily track of the market to know exactly where it's going to go in that. So I do want to jump back over to the web browser for just a moment, because I think it's worthwhile to take a look at the calendar, because I think that we have some catalysts coming up. The biggest one that I think is in our future here, let me see, not Wednesday, it's Thursday, April the 27th, GDP growth rate, 8:30 a.m. That's next week, next Thursday, 1 week from today. That number coming in weak is going to be a significant sign for us that Q1 wasn't as strong as we had hoped, and it is possible we're going to see further weakness throughout the year, possibly leaning into recession, especially in my opinion when those student loans come due. I think that that's going to really soften Q2 for us and really make Q3 and Q4 put us on shaky ground. So no surefire thing for recession. It is possible that we avoid it entirely, and maybe we just have a period of slow growth, as has also been talked about. And I can't come out and pretend to be any sort of guru that has the one answer and the one thing. I will never do that. I will only look at the clues that I have. And I think that there's a lot of reason to be uncertain out there. I think that it is a good possibility that we see a slow enough growth that it does start to turn into economic contraction. And then we do see a small recessionary time that we get maybe 2-3 quarters of economic contraction instead of growth. So we'll have to watch and see as that plays out, and we want to hear more from the earnings. So GDP, I think, is that next big thing that we get. Something else that's worthwhile to mention is what we get from Q1 earnings. Let me transition back here. Q1 earnings, They've already started coming out, and we haven't really heard sunshine or rose reports from that. I think especially eyes on the NASDAQ with big tech earnings, hearing from Apple, Microsoft, Facebook, well, Meta, I should call them. Nvidia is going to be another big one that we have out there. Watching the big tech earnings come out and seeing what happened. Google should also be mentioned there. Poor Google. I mean, how bad can we feel for Google at this point in time with ChatGPT and Microsoft out there? I still think that they're a champion company. We are out on YouTube right now. I don't think that Google is going to lose its top seat anytime soon. It is something to pay attention to with Microsoft and ChatGPT joining up, having that first mover advantage with that natural language type AI that we're seeing, because it is so visible to everybody, sort of like pictures bring the realities of wars home. Now we have ChatGPT bring the realities of AI to the common person, and that is something that is worth noting and worth watching. So big tech earnings and GDP are the two big things that I think are really going to move the market, or have the potential to move the market out of this sideways action and point us in either direction, up or down. If we get stronger than expected GDP growth for Q1 and further evidence and possibly an excellent outlook for the big tech earnings, we can rally on from where we're at. If we get a meager, weak economic outlook from big tech and we get a revision down, or we miss consensus to the downside for GDP, those are things that can draw it down. So that's what I have for you guys in this video. I hope they enjoyed my commentary. If you'd like to hear more, check out the link down in the description for the Patreon. Get access to my Patreon exclusive content and access to my private Discord. We'd absolutely love to have you over there. And then also don't forget about your free stocks through Moomoo by signing up, depositing your money. Take advantage of the free stocks. Why not get that support for yourself and support for me and my family and everything that I do here on YouTube for you. Thank you guys for allowing me this time. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.